What's up everyone, Dylan here. I wanted to hop on and do another episode of the weekly analysis video where I will be outlining some of the key technical areas that I will be watching to gauge relative strength and weakness and ultimately come up with trade ideas to work around. With that said, we'll hop right into it. So, looking at the S&P 500 futures chart using the contract adjustment setting, we can see that the S&P is hovering right around the all-time highs that were made back in mid-July. Okay, that is a bullish piece of context. Another bullish piece of context is the fact that RSP is also hovering right around all-time highs. RSP is the equally weighted ETF of the S&P 500. Okay, so the normal S&P 500 is comprised of 11 sectors. Each sector has a different weighting. The majority of the weighting is within the tech sector. So what RSP does is it gives you a broader sense of overall market health. Okay, it gives as if the sectors were all equally weighted. On top of that, you also have NYA, which is making all-time highs as well. Okay, NYA is the NYSE Composite Index, which basically shows a compilation of 2,000 different instruments that are listed on the New York Stock Exchange. So yet again, NYA gives a very, very good visualization of the, overall broad market health, okay? So the fact that NYA, RSP, and the S&P 500 are all at all-time highs clearly shows that bulls are in control, okay? That is a fact. However, there are a few signs that are kind of raising some red flags, so I wanted to go over that and then talk about the key upside areas and then the key downside areas that we will be looking at going forward, okay? So, first off, I wanted to look at the daily time frame on the RSI, okay? This is one of the things that kind of presents a red flag and kind of shows that the bulls are kind of in like a predicament right now, despite those three instruments being at all-time highs, okay? This one's the first one. So, you have the S&P double topping at previous all-time highs back in July, yet the RSI is showing a divergence. So this right here usually is a bearish sign. Now, that does not mean that the S&P is going to tank and crash, right? Instead, it could mean that the S&P needs a little bit of a breather or a little bit of a pullback before moving higher. Now, it can, come down pretty hard from here, but I just wanted to outline some of the context before, jumping to conclusions, okay? So this isn't ideal from a bullish perspective, okay? This is somewhat of a bearish piece of context. On top of that, you also have this here, right? I'm going to go to US 500, which is the cash index of the S&P 500, and you could see it is rejecting a resistance trend line that has been in effect since January of 2022. So it was established in January of 2022, and then you just mark from that high to the high back in July of 2024. And you could see by doing that, by connecting the dots, we failed up there on Thursday, okay? So you have the RSI divergence also lining up with the S&P futures previous all-time high with the contract adjusted setting on, as well as the trend line that we're looking at right now, okay? On top of that, the S&P futures rejected right at a previous resistance using a measured move. So this is a little trick that I like to use. I put it in the Discord, and I said, since ES is at uncharted territory, you have to think outside the box. Oftentimes, I'll use measured moves to predict what happens next. Let's take this example. The July 11th all-time high was broken twice, one by 11 points and the other by 13.5 points before dropping lower, okay? And I gave kind of a visual of what I meant by that. So I'm going to show you guys what I mean, using this example, okay? So we go back to here, right? You could see clearly the this rally went up to a July 11th high, okay? So if I mark that July 11th high, you could see that it occurred at 5769.00 using the contract adjustment adjusted setting, okay? So I latch onto that high and I go up to where it broke above. You could see it broke by 11 points, and then the second time broke by 13.5 points, okay? See 11 and 13.5. So on both those tests, it led to a fake out, right? Ultimately trapping buyers that were chasing the high to the upside, and then it ultimately, fell apart and ended up resulting in a 5% move to the downside, okay? So using those same exact metrics, the 11 and the 13.5, I did that same exact thing, okay? So remember that, 11 and 13.5, right? So now I draw the previous all-time high, right? So it was 5782.5. I'm going to round it up by 2 ticks to 5783. And I do exactly the same thing, right? I add 11 points to that, and I add 13.5 points to that, okay? So 11 on top of that, the 5783, would be 5794. Okay, so 5794, I'm going to draw a line there. We'll make it red for resistance. And then I'll also take 5783 plus 13.5, which is what? 57, what is that? 5796.5. 5796.5. So we'll go ahead and draw that as well, 5796.5. Oh, I'm going the wrong way. So those are the measured, that is the measured move resistance using a historical move from the past, which was the mid-July 2024 all-time high. And you can clearly see if I pan over, that's exactly where the market found resistance before coming off, okay? So that area remains a very, very important resistance to the upside, as does the US 500 trend line that I just went over, okay? So those two areas to the upside are key resistance, okay? Going forward, despite the S&P futures, the NYA and the RSP being at all-time highs, the NDX, which is the NASDAQ cash index, tells another story, right? Meaning it has been showing relative weakness. It's still down 4% from where it was trading at all-time highs back in July, okay? So if you're a bull, you want to see it take out this area of double top resistance that it has been struggling at, okay? So that's 19,000, call it 940, okay? So you want, if you are a bull, right, a market bull, you want to see NDX take out that 19,940 level to the upside and hold above, right? You want to see something like this, where it breaks above and then gets defended on dips that occur above, okay? That's what you want to see as a bull, okay? So that's another important area to the upside, and then clearly you would like to see it fill that gap and then ultimately take out that all-time high, which are the two levels even further above, okay? So those are my areas to the upside, right? The S&P level, the US 500 trend line resistance, and the NDX double top resistance that it has failed at very recently, okay? Going forward to the downside, okay, I will be using this trend line that has been working very, very well, okay? You could clearly see that it had tested and rejected, how many times is this? 1, 2, 3, 4, 5 different rejections using the 1-hour chart. And then not only that, but once it broke above and broke out, look what it did on the retest. It got bought right at that line. So that previous resistance turned into an area of support. Say, so going forward, that 47 or 5740 area on the S&P futures remains a very, very important level for the bulls to defend. Above that, the bulls stay in control. Okay, very, very, very simple. Above that, bulls are in control. Now, if that level were to breach, I'm going to give you further downside areas, okay? So the S&P 5740 on the futures contract is very, very important. On top of that, we have this NASDAQ area as well that just so happens to coincide with that S&P 5740 level, okay? If we go to a 2-hour chart, you can see this area was clear resistance, right? All these tests back here, including this test here, and then once it broke above, guess what happened? That area turned it from resistance to support once it was retested. So 5740 on the S&P 500 futures, as well as call it 19,900-ish on the NASDAQ futures, are very, very important for the bulls to defend going forward. If both of those, not one, but both of those breach, in other words, if price breaches below or gets below both indices, the S&P futures 500 futures and the NASDAQ futures, you want to see that action is coincided with the VIX breaking above this area of resistance. Okay, I'm going to go ahead and get rid of these. Okay, so like I said, very simple. If the S&P 500 futures breaches 5740 and NASDAQ breaches that 19,900 area that I just went over, you want to see the VIX break above this 18.20 area and stay above. Okay, what that is going to do is keep additional pressure on the indices. Okay, so you want to see the VIX have upside traction and momentum to coincide with that weakness in the S&P and the NASDAQ. Very important. Okay, going forward beyond that, if the S&P breaches 5740 and the NASDAQ breaches this 19,900 area, with the VIX also showing strength, the next downside area is this NASDAQ anchored VWAP, which has proven to act as support, as you could see right there. Okay, so that would be the next level to the downside. If that breaches, the next level beyond that would be the 100-day moving average on the US 500, which we talked about the last 2 weeks has been a clear area of support this year. Okay, so that remains the line in the sand on a larger time frame for the overall market. Okay, so those are my levels going forward. In terms of events, we have jobless claims on Thursday and PCE on Friday. Those are the big two this week. So there can be some solid volatility. That is it for me. If you guys like this video, give it a thumbs up, drop a comment, give me recommendations, give me feedback, whatever you got to do. It's all appreciated. Peace.